and our Facebook to our closed group as we wait for Danny to come on here. Hope everyone is having a good day and has gotten a lot out of the content. We've had a lot of great speakers today on all different kinds of topics: authority platforms, cost segregation, tax advantages, short-term rentals, you name it. We've had it. So hopefully we've had some great, gotten some great things out of it. So, all right, I'm going to see if Danny is ready here. All right, looks like he's still not quite ready. But I'll go ahead and get it started and get my Facebook going here. So what we're going to go over today is working with brokers is going to be our first topic of discussion. This is an important topic. Let me pull up some of my talking points here so we can make sure to cover everything. Give me 1 second. Hey, Danny, how's it going?
It's going well, Brandon. I'm going to need like 5 to 10 minutes. I apologize.
Yeah, no worries. No worries. I'll burn some time. So, all right. So the most important thing is, let me go ahead and bring in our other guests here as soon as Danny's not there. Hey, Ty, can you hear me?
Hey, Brandon.
Hey, good to see you today. For those of you who don't know, Ty works with Cushman Wakefield. They're talk about deal flow. They've got the deal flow, especially in the Southeast. We work with them quite extensively. And we thought it would be important to have you on today to kind of talk about broker relations and why that's important to maintain credibility, things that you're looking for. Danny was just on. He's got a couple of things he's trying to wrap up. You know, we're all working and trying to do these things at the same time. So we'll give him a few minutes. But while I get started, I'm going to just talk about, for those of you listening, where do we find deals? In the space that we're in, anything over 100 units, there's no driving for dollars. There's no, LoopNet. It's through brokers, right? Because that's where these larger multifamily properties are at. And there are different firms that carry them. And you need to establish a relationship with your local brokers of the market that you're interested in if you want to get deal flow. It's very important. The brokers play an important role because they know the market. They know a lot of the statistics that are pertinent to the market that you're looking in, especially if you're investing in markets outside of where you live specifically. They know a lot more they got their finger on the pulse of that local market a lot better. And so we want to go over today. I've been to a lot of real estate conferences, Ty, as we talked earlier, and there's very few brokers there, right? We'll talk about brokers and how to build broker relations, but we want to get your take on that, and from your perspective, talking with operators and with sponsors, what are cues you look for and things like that. And I'm going to go through just a few questions, but why don't you give us a little bit of a background about yourself, how long you've been in this space and what you did before that, and just tell us a little bit about your story.
Yeah, sure. So I'll just give a brief. Can you hear me, by the way?
Yeah, I can hear you.
Sure. So I run South Carolina multifamily within Cushman and Wakefield. Our team in the Carolinas in 2018 did 80 transactions. So we're seeing a lot of deals. We're selling a lot of deals. I think in 2017 we did 60 trades. So a lot of trades in the Carolinas. Before that, I was 5 years with Cushman in Atlanta. So now I sit in Charleston and cover all of South Carolina.
Excellent, man. That's where we are at today. Ty, you just you travel obviously for your work, so he was traveling down back to Charleston today. We're in Columbia, just about an hour and a half away from Charleston, but
Right.
he's in our market. We love the South Carolina market because that's our home, and so he has a lot of experience here, and with his extensive background with Cushman and commercial multifamily properties. He has a good wealth of knowledge that can help us. So please post questions in the Q&A box. If you type them in the chat box, they may get lost, in the feed. So make sure you type them in the Q&A so I can kind of follow them here. So, okay. So what we want to do is go through a few questions. So when a group comes to you, let's say they call you up and ask you, my camera went out of focus there. When they call you up and ask you to meet with you, or you've never heard of this group, what are some things that you're looking for when you talk to that group?
Yeah. So are you asking if, call me out of the blue and they're looking to invest in South Carolina?
Yeah. They want to get to know you. They've presented themselves as a capital group or, XYZ Capital. There's a dime a dozen of those. To vet them, or what are some cues that you're looking for when you meet or talk with that new group that you don't know anything about?
Yeah, Brandon, good question. I think the most important thing is probably equity. Does a group, do they have the equity, or are they capable of raising the equity, right? That's kind of the $1 million question. So, if anybody wants to reach out, we're always more than happy to help any way that we can. But if you're seriously going to be a player on a deal, there's a few things that we look at, and I'm happy to go down that list. But I think the most important is, do they have the ability to close, and candidly, are they going to be able to raise the capital? Our average deal size was $20 million in the Carolinas this year, which means more than likely they're on the small size. $5 million was probably the equity check that they were going to need to be able to raise. So I would say capital is probably the first thing that we vet.
Yeah, and we found that to be the case as well. That's one of the number one questions that comes up is where's your capital coming from? And when you're talking about an average deal size of 20 million in the Carolinas, your GP has to have a combined net worth of 20 million or of the loan amount in order to get that deal. And so, what you said you had kind of a list of things that you're looking for. Feel free to share as much as you can of that for our attendees. Yeah,
well, I think you'd asked me earlier what are we looking for if someone's going to buy a deal, and to be able to create a relationship with us. The number one thing is to just be reliable and do what you say. In order to do that, I think there's a few things that we're going to vet to make sure that all the boxes are checked. And we've done this multiple times in best and finals together, right? Mm-hmm. One of those is just going to be doing your homework, making sure you've toured the deal, that you know the comps, you've seen the comps candidly, and you've got a fair underwriting. South Carolina, property tax is a point of sale state, so taxes are going to adjust. We don't want any retrades that you didn't underwrite taxes correctly. Access to capital, that one's a little bit tougher. There's a few ways to raise capital, and I know it's kind of the chicken and the egg. You can't get a partner on board or raise the money before you've been awarded the deal. So we can talk more about that and how to get a broker or a seller more comfortable, because I know that can be a little bit tricky. And then lastly, one thing we always vet is the debt, right? How fully vetted are you on the debt? And candidly, with the market volatility, have you stress tested it? If the 10-year treasury, if you're going for agency debt and the 10-year treasury moves from 2.7 to 3, are you going to retrade, or, do you have enough room in there? So that's kind of just big picture, debt, equity, game plan, and execution.
So you talked about knowing, where the equity's coming from or the capital's coming from. What are ways that you what are things you ask to find that out, and what kind of answers are you looking for?
Right. So, I guess a lot of groups, either if you don't have, $5 million sitting in your bank account, you're either going out and you're raising it and, kind of a syndication mode, or you're doing a JV partnership. I think the best way to get around that is, one, if you have prior deal experience, I would always say, hey, listen, here are some deals that we've closed. We've never had an issue raising the capital, and here are some references. Call X, Y, and Z owner, call X, Y, and Z broker. That typically helps owners and brokers get more comfortable. Let's see what else. Listen, I think being able to share deal experience, right? So for you guys, when we were investing final on a deal, you said, hey, listen, we're doing the deal down the road, right? So I know the owner, I can call them, got to be really comfortable, right? So getting the first deal under your belt is probably the hardest. Once you have that, then I think you don't necessarily – it's easier to get around the equity question if you're going to raise it while under contract.
So like getting the first deal under your belt, like let's say, we've got a group that's just starting out and they have the investors and they can do it, but they just don't have the credibility, to bring in somebody, that has the credibility, that does know like you or someone or some of the other sellers that have done trades with someone on the GP. Does that help in the credibility? If you see a name in the GP or they mention that, hey, he's partnering with us on this deal, is that going to help the credibility of this person that maybe it's their first deal?
Right. 100%. Anything at that point, if it's your first deal, you've got to pull all the strings, all the back channels. Get somebody that can vouch for you to call me or to call somebody else on our team and say, hey, listen, these guys can raise the capital. They've done it. I'm working with them. I think you really have to figure out some way in, because candidly, in this market, you're going to be competing with guys that we've probably done a ton of business with, or that can show, a ton of money in the bank. So that's probably the hardest thing, how to get the first deal. And I would definitely recommend any kind of back channel, any kind of recommendation, other brokers to reach out, or, anybody that can make a phone call for you.
Excellent. Let's see. Okay, this is kind of, I like to be very candid and direct, right? I don't like to beat around the bush. I just like to ask, direct questions. So is it annoying when groups are constantly underbidding properties? Let's say they're a new group to the area. Maybe they've closed some deals, but they just keep coming in. They're just like, you give them the guidance. And for those of you who don't know, if sometimes you get guidance, you say, where do you think this thing's going to trade at? And we get a rough number, to get us in the ballpark. It just saves some time there. But, and then they just keep coming in under, way under. It's not like, do you find that, maybe I shouldn't use the word annoying, right? So, but like, is that a waste of your time, or are the quantity of bids important to the seller, or how do you weigh that out?
Great question. So, I guess I'll answer it two ways. One, no, it's not annoying at all. Listen, I think if you dig in and you do your underwriting, and you come up short, I think it honestly helps the broker show the client where the market is. I wouldn't say just throw in an offer if you haven't done your homework and, you're not comfortable. But if you underwrite a deal, tour it, know it, you're comfortable at a number where you think it makes sense for you, then definitely offer. Because at the end of the day, what we're trying to do is show that we've made a market, right? So if you're not there, no problem. We'll move on to the next one together. Now, on the other hand, I would not tell the broker, hey, if we're whispering 20 million, you're saying all the way for the 5 weeks of marketing, we're at 20, we're at 21, then you show up at 15 and you do that repetitively, they're going to start losing trust. But, I would not say that throwing a bid in lower than is whisper is annoying, because candidly, we don't always hit our whisper price, right? So you never know. And if it's an offer you can stand behind, I think you always submit it.
Right. Because, I mean, these deals are sitting out some, 90 days or 30, 60 days on market. And, who knows what can happen to rates or, proceeds on loans in the meantime. So what was market when you listed it is not market when you go to CFO, call for offers. So, that's really kind of that is really your guidance, but it's not like residential real estate where it's like, I'm asking this price, okay, I'll pay you this price. And it's a back and forth. It's, everybody does their underwriting based on the market, the local cap rate, the NOI, and comes out with their bid.
Right.
And yeah.
And one other thing, I think it also helps start to build a relationship with the broker and start to get synergies. If you say, hey, Ty, your guidance was 20, I'm coming in at 17, and here's why, then I can see, for, Brandon and your group, why doesn't this deal make sense, right?
Mm-hmm.
And then as we look at more deals, I can understand what does make sense. And when off-market deals or other deals come to me, I say, hey, this isn't for Brandon. I don't need to waste his time. Or this is for Brandon. Let's take this one down. So, I think you've done a good job with it, being clear why you don't get to the price, because maybe it's something that we haven't thought of and we need to create a solution for to get to the price that we want, right? So, again, I think this panel is about, or this portion of the panel is about building a relationship with a broker. And a lot of it is to create synergies. So they know what you're looking for. I know what you're looking for. And, it helps us be able to get more deals done together, I think.
Okay. Excellent. Great answer. So do you prefer groups to bid on properties, even if they know they won't get in the best and final? Like, we've had some situations where we look at a deal and we're like, hey, I like the deal. This is very 30,000 foot level. I like the deal. We're going to bid on it. We get the guidance. But then when we finally get, we have our conference call with the partners and we get real granular on the underwriting and it's just coming in. And, we've had these conversations before, where we'll call you and say, hey, man, we're just coming in way lower than what your guidance was on that. What are your thoughts on, just submitting those things, even though we know we're probably not going to make it in the final round?
Yeah, again, I think if you've done your homework and, it makes sense for you, I would submit it because, again, it allows us to say, hey, here's a group who, is very active in the market. Here's where they're underwriting it. Here's why. And, we can go down the line if we have 20 offers. It allows the owner to make a decision if they want to sell or not, candidly. And it shows them why there's certain feedback. So I think it helps us demonstrate the market, candidly, and be able to explain to the owner, the seller, why the market is what it is. High, low, bright strike. So I think it's helpful. And again, when you do submit, if you're not getting to the number, have some feedback.
Yeah, and that definitely helps because I'm sure you run across some sellers that think their property's worth more than it is, or, well, we put this much money into, we replaced the roofs and the walls, and so we've got to get this much out of it. And I mean, in the end, they're your client, right? So, you're working for them. And so, but sometimes some of that feedback will help kind of bring that back down into reality, I would imagine.
Well, just, at the end of the day, it's their decision, what they want to do. And it helps them have a more educated understanding of what the market is.
Yeah, makes sense. All right. So this is a kind of a big question because it's not going to have the same answer for every seller for every property, but what are some ways that you determine who's in the best and final, or should I should say, what are some ways sellers determine who's in the best and final? But I know that sometimes some sellers are like, listen, the market, I'm just going to let you handle everything, including who's in the best and final. And some are very involved. So
this is to determine the best and final list or who's selected. List. Sure. I think typically best and final list, and it depends on the seller. It's going to change. A lot of the more institutional groups are, they're going to pick. Some more of the private clients will say, hey, listen, you're the expert. You kind of lead us to the best path and process, sorry. But typically best and final is going to be based on price. And then the next rounds or when you're really keying in on, who's the highest probability to close, A lot of that's going to be determined with past experience and terms.
And so when you get into the best and final round, so you've got, say, 30 people bid on a property, and you've gotten it down to, let's say, 10 people in the best and final. How important is the confidence in the group's ability to close? How important is that factor in the selection of the winner, I guess would be the best term?
Yeah, good question. Again, it's going to depend on the seller, and it's also going to depend on probably the gap between the pricing, right? I've seen it. If there's a really big gap, then the seller's probably more willing to take a risk if they think the backup buyers will still be there. But again, it's going to depend. It's going to depend completely on who the seller is and what their risk tolerance is. A lot of sellers. It's a long process going through a marketing campaign, and nobody has a crystal ball on where the market's going to be in 3 to 6 months, right? So, if you have 3 really legitimate groups or 1 really legitimate group, I say legitimate, I guess a group that we know or they know and has closed before. I don't know what the price difference is between that and going with somebody who's a little bit more unknown. It's going to depend on the seller.
Right. Yeah. Because obviously proceeds are important to the seller. That's why they're selling. So that does play a factor. But, one in the hand is better than 2 in the bush type mentality is also important too. Because do deals – okay, this is a rhetorical question, but have you ever awarded deals to someone, or the seller's chosen someone to buy a deal, and for whatever reason – that person didn't come through or couldn't come through or something, they wanted to retrade or something like that, and you have to go back to another one of the other buyers?
All the time for market reasons, for not having equity, for not underwriting correctly. There's a million reasons, and again, we try to vet it out as much as possible. We spend a lot of time vetting out buyers when it gets down to that round, but there's so many number of things that can occur. So it happens all the time. Another reason to candidly make sure if you spend enough time on a deal, to put a bid in, because it can always come back to you.
Right. Yeah. And that's one piece of advice that I think I would give anybody out there, is to put the bid in. That was one of the questions earlier. Should you just put the bid in? Just put it in, because you don't know what's going to happen. And sometimes deals will go through the best and final. Someone will be chosen, that person won't get chosen, and even the secondary buyers won't pick it up, or it just won't. It'll come right back on market again. So, that happens sometimes. That is not as often as it getting kicked back to a secondary seller, but it does happen. So, put your best foot forward. Make sure you're confident in your underwriting, and put your bid in. It is what it is.
Right.
So this is something that a lot of people, because people are growing their space. So a lot of people will start and fix and flip, and then move to single family rentals, and then a quad. And then, so they run into this question, and I've never really seen it applied in our space, in the large space, but I get this question. So I'm going to ask you, I'm going to ask you a follow-up question after this. Have you ever asked somebody for proof of funds in your space that you're in now?
It's not as common in this space. People do send it sometimes just to show that they have it, but I feel that no, it's not that common, candidly.
Yeah. Sometimes I see that practice when people, it's almost like would you see it sometimes as a blow off to maybe a new group or something, like, oh, well, you have proof of funds, because it's not really part of this space, would you say?
Oof, that's a tough question.
Yeah. I don't want to put you on the spot, but I like to be.
I don't know that it's a blow off. But again, as a new group, you've got to, you really got to prove yourself. Again, the hardest thing is probably the first deal. So that is probably when we do ask proof of funds. When it's a new group, but I wouldn't take it as, I wouldn't be offended. I would take it as that you're sincerely have a good shot at winning the deal because they're digging as deep as they can and trying to figure out everything they can about you.
Okay.
So
That's a good way
do
to
what
look
you
at
can. And, yeah.
And one question came in. I'm going to kind of read it, but then also kind of explain this. So, and this comes from our understanding of kind of the residential market, but what are your thoughts on an investor working with a seller only broker? And I guess the biggest thing to understand with the multifamily space is this doesn't work like, a buyer and a seller broker. It's just really a listing broker. Do you ever have somebody come in with their own broker that negotiates with you?
Just to understand correctly, you're saying that they're a broker representing a buyer and they come in and negotiate.
Correct. Yeah.
It does, and we're more than happy to work with anybody. It's not as common, candidly, for our space. It just becomes so efficient, and the fact that it's typically going to be listed by a broker, and there's not, out of the 80 deals we did last year, I don't think there was one buyer broker. So it's, we will obviously, if it's going to get the seller the highest price and best chance to close, but it's just not that common.
Well, and I think the reason is because as opposed to buying like a house where you have a buyer and a seller, they're really working on all the legal stuff and everything for the buyer or the seller. Whereas in the commercial space, we need to know what those numbers are. We're real estate professionals ourselves. So there's no need, like as a seller broker, obviously just because you have the platform and you have the customer base and everything to have a broker. But as far as having a buyer broker, we should know where our numbers are and what we're buying. So that's why I think it's less common than in the residential market. But it does still happen, like you said.
Well, yeah, it's just for whatever reason in the multifamily space, it's if you're going to be a buyer broker, you're going to get paid by the buyer. So there will be times where we help guide buyers towards other deals, but probably just don't go in and ask for a fee. More is just kind of being relational.
Yeah, that makes sense. How important is, okay, I'm going to use this term. I'm going to give it some explanation for those that don't know, because we have varying levels of people that are listening here. So a term I'm going to use is hard money. That's earnest money put up. Okay, earnest money usually has a period of time before it becomes hard. In other words, before it becomes non-refundable. And so when the market is more aggressive, a lot of times what we'll do is use a term called hard money day one, where you're putting up cash and you said, listen, and unless they just like grossly misrepresented the property or something like that, we're going to get this thing. We're not going to try to retrade. We're not going to come back and say, well, we don't like this. We're so confident that we're going to buy this. We're going to close that we want to put this money up. How important is that when you get into the best and final round?
Sorry, I had an email come through. Were you saying non-refundable?
No, the hard money day one, in the best and final round.
How important is it?
Yeah, how important is that? I kind of did the explanation of what that is, especially as it relates to your confidence in the buyer group.
It's a good question. Hard money's become a lot more common over the past few years. 5, 6, 7 years ago, only a few people were doing it, and they were winning a lot of deals. It's become pretty common now. I guess it just depends on the deal in the market. I would say, just ask whoever's the broker running point. Ask them, if they expect hard money. I'd say we're probably seeing it 50-60% of the time though. And if you're competing with somebody with a good track record and they are doing hard money, it's hard to beat that, right? It's pretty strong, non-refundable money.
Right. Yeah. And that all goes back to what we're talking about, confidence in the group and their ability to close the deal, especially if you're relatively new to a market, even close 1 or 2 deals, but just come in strong like that and to prove that you can put that kind of money up and you're so confident in your ability to raise the money or have the equity there that you're willing to risk that money on that.
If you're not, again, hard money has its ups and downs, definitely. For a seller, I do think that if you're not willing to do hard money, a shorter due diligence is pretty strong as well. So if you can do a 21-day due diligence or get going with an access agreement, there's definitely things you can do to improve your terms and timing without necessarily doing hard money. And then, we could talk for a while about hard money, and everybody seems to have a different understanding of it. But, true hard money is hard to beat.
Excellent. Well, Danny's come back in. While he's Dan, I'm going to let you introduce yourself again and come in here. But I just was looking at some of the comments, and I'm going to reintroduce Ty. He's a broker with Cushman and Wakefield. We work with Ty and many other guys from Cushman. They have a ton of deal flow in the Southeast. Really, they were keeping my inbox full there for quite some time, and are still doing so. We work together, talk to these guys quite often, and we really. I like working with Cushman just because they're very easy to talk with. And when I say Cushman, I'm talking about Ty here. Talk with Brooks as well, and Paul up in the North Carolina market, Raleigh market, and the guys in the Atlanta, Travis, Presnell in Atlanta market. So we're constantly talking to them. And you guys got John working with you now, also in South Carolina. I know he's excited to take that next step there. But Danny, thanks for joining us. I know you're multitasking, and I know you kind of missed a lot of the topics. We kind of have gone. Let me just recap so we don't double touch anything. I was talking to Ty about how a new group coming in gets confidence from the brokers. How do they gain credibility? And really, one of the things Ty said was he's looking for, equity. Where's your capital coming from? And really for that first deal, do you have a resume or someone that can tell us that, yeah, we closed the deal and it was super, and they got the money, no problem. Hey, George, that's George barking in the background. So, and then, is it important to bid on properties, even if you're under the guidance, different things like that. We've gone over hard money. So anything you'd like to add to this that you think might be pertinent to our attendees when talking with Ty?
One thing that I did starting out early on, and you guys covered it a little bit about like the resume or having some sort of one-sheeter is what I would do. I put like a one-pager together about my experience in real estate, a little bit about where the capital was coming from. And if there was a part of the down payment, I would include a screenshot of my Chase bank account information to say, here's my hard money, and be able to hand that in with my offer. And that always built some credibility. When you're looking or you're evaluating a $10 million multifamily deal and you're putting down, $200,000 or $500,000 hard money, you might not be able to include a screenshot of your bank account with $500,000 in it. But what I would say is having that relationship where you can be open and honest with the brokers and the people that you're working with. For us, our relationship with Ty is not one transaction. We're not looking to work with Ty one time. We want to do 100 deals with Ty over the next 10 years. And so for us, I think we just spend the time to invest in our relationship and, going out, meeting Ty at many different properties, having coffee with him, talking about what we want to achieve and how we can, achieve that through his market knowledge, because, Ty is probably going to have more experience in a given market than you may have, because they've talked to 100 different owners in the area. And so I would just say utilize that relationship and don't think of them as an obstacle or the gatekeeper to the deal, but think of them as your partner or advocate in that space. And so, one thing that I've utilized our relationship for is I'm reaching out to Ty and his team to get me market analysis and research, because I know, his team pays big money for these systems that can pull and aggregate data in a really nice format and fashion. And so I think it goes kind of both ways, where if us as the buyer, if we're asking the right questions and providing the right information, it makes Ty's job easier, where he can say, hey, these guys are pretty darn serious. Look, they're, doing these events, they're speaking at conferences, but also they close deals. They've got money. They can close, and they do it. And also, of the 30 offers that we received, they were the only ones who asked for market research for us to provide. And either, we can use it to validate our own research, or we can use it to just confirm what we're finding and what we see in that market. So my 2 takeaways, because I'm always down to the numbers, my 2 takeaways is don't be transactional and invest in that relationship. And that's what we try to do.
Yeah, that's a great point, because, our success is Ty's success, and Ty's success is our success, whether, he's listing properties or, as we're buying properties, we're going to one day need to sell properties. And so this is really a relationship that we build. So it's, really a two-way street. So utilize that, get the historical rent data, the future rent data, projected rent data. I do have a question for you, Ty, and answer to the best of your abilities. This is coming from a wholesaler perspective. So I don't know what interaction you've had from any wholesalers. The question is what is your opinion on wholesalers who can provide deals? And if one has a deal, what procedure should be taken in order to get the deal done effectively, if not licensed?
So when you say wholesaler, are you referring to just direct with the seller?
Yes, direct with the seller. And let's see, I'll ask him to clarify. Yeah, he said yes.
So if you're dealing direct with a seller, what's the best path to get it done, I guess? Is that the question?
Yeah, I guess not being licensed, you're a wholesaler, so you're trying to find a buyer, not a licensed agent. Do you guys ever deal with wholesalers as like a middleman type thing, or?
So if somebody is being a middleman but they don't have a license, what's the best way to get paid legally?
I think I may be misquoting that. Danny, you want to?
I was going to say it kind of sounds like Brandon is a property owner. I know Brandon, and I go to Brandon and I say, Brandon, I'm going to buy your apartment for $1 million, and I'm a wholesaler. And then I go out to my list and I can't get anybody to sell it. And so I come to you and I say, Ty, can you help me sell this property? I'm going to buy it for $1 million. I'm at a loss here. My take on investing in apartments and just kind of knowing the space, and maybe we can change it up to our apartment deals wholesaled. I would just say, if you're looking for an apartment building that's 150 units or greater, chances are the seller is a little bit more sophisticated than selling off market. And they're probably going to go to Ty or the other brokerage firms to sell their property. Or they're going to go to Ty and say, hey, Ty, let's do a pocket listing, because I know, Ty, you can sell the property in 30 days for me if we push it hard. So I would just say the larger multifamily deals, not really likely to be wholesaled in most cases, but maybe the smaller, 30 or 50 unit kind of mom and pop operations, you might be able to do that. I would just say it's going to be a challenge. And I think there was a podcast from yesterday, Scott Bauer, about wholesaling. Maybe reach out to Scott about the ins and outs of wholesaling.
Yeah, definitely.
Yeah. I would say, listen, if you can find an owner that's, mom and pop and they own anything, and you can get a direct deal, then we don't like that because we don't get paid. But, you could probably get a pretty good deal there. So And if that happens, listen, and you want some insight, we're always happy to help because candidly, we want the business on the back end. So again, it's long term for us. You know, like Danny said, we're looking to do 100 deals, not one. I do agree. I think at this point, most of the deals north of probably 100 units are going to be wholesale. And that's probably where we're going to get the efficiencies regardless. But listen, you never know. I think there probably are some mom and pops that if you call at the right time, you can get a good deal.
One person's asking if Cushman covers the Wisconsin market.
Sure. We do. I do not know who the best person is. If you send me an email, I can link you in. I can figure it out. My email is ty.cohen@cushwake.com.
And that's TAI.COHEN@cushwake.com. Right. Definitely reach out to there. Thank you, Danny. Put it look in the chat box, Ty's emails down there. So again, what we started out talking about is working with brokers, and I really felt it was valuable, and Ty agreed to do this last minute. Somebody else mentioned that they didn't see Ty in the program speakers, and that's because yesterday while I was coming up with content for today, I was like, you know what, I didn't need to get Ty on there. We talk a lot. We talk a lot on the phone. We worked a lot. We met at properties. Danny's in Charleston, Ty's in Charleston, so they live just across town from each other. So we work together a lot, and he can provide valuable information to you. So the key takeaways from this, and we don't want to keep Ty too long because we're gonna move on to our other section about CapEx budgets. But key takeaways here are, make sure you're having conversations with your local brokers. Know who they are. Know who the movers and shakers are. You're going to have to establish credibility, whether that's through maybe a one sheet or maybe some historical deals that you can provide that you've closed, where your capital is coming from. That's a very important question. And really consistency, and being serious in the deals and maintaining that relationship. A lot of times people are like, how often do you like to hear from people really when he has a deal listed? We call Ty on a regular basis to see what's going on and to ask him questions about stuff. And we've talked about, other deals in the market. One thing that I would like to talk about before we let you go is what about like what was called pocket listings? Danny, you mentioned a pocket listing. Are those real, or are those just unicorns?
Good question. Yeah, so and I'll try to be as transparent as possible. When you start getting on a run with a broker, and you've closed a deal and you've did everything that you said you were going to do, and you made them look really good, the confidence, and if you do a deal with me, my confidence in your ability to do what you're going to say and close and make me look really good, which is what I need, is the way that you're going to get the pocket listings, right? So yes, they're real. Again, we did 80 deals last year. I think probably 25% were off market. And that might just be that you get a shot to look at a deal before it goes to market, right? So you and maybe one other group get an opportunity. If you can hit a number, it's your deal. You don't have to go through the whole dog and pony show. So another reason to, when you submit on a deal, have it fully baked, debt, equity, comps, underwriting. So you do perform. And again, you do one deal and then they just start flowing in. So it is probably harder to get pocket listings or off market deals before a broker has full confidence. And you probably don't have to actually close a deal to get the broker's confidence, but that's probably the easiest way. But no, they are real. And I think we'll probably do, again, 25% of the deals in the Carolinas off market this year.
Well, can I jump in with a couple of rapid fire questions for Ty?
Sure.
Cool. I wanted a little lightning round action. I'm coming at it from a perspective of, let's say, Ty, I'm a new buyer. We haven't met before, and I find a, Cushman Wakefield email, and I want to know what's it going to take for me to get in the deal. If I don't schedule a showing or tour for the property and only submit an offer, is my offer going to be taken seriously?
Two answers for that. One, if you make best and final, if we're running a process, and you're, if you go into best and final, then we'll listen to it. We probably won't take it seriously though until you tour. And even if you've done 20 deals with us, if you haven't toured the deal, you're not going to win. I mean, it's too competitive. There's too much risk involved for us. So I don't care if I don't know you, if I do know you. If you haven't toured, you're not going to get awarded the deal.
So if I'm out there and I'm getting a bunch of deal flow and I'm just writing LOIs and submitting them, and I'm not having much success with it, but I haven't gone to do property tours, that might be a reason why I'm not getting a good relationship with the broker, or I'm not being taken seriously.
100%.
Okay.
And listen, I understand if you're far away and you're looking at properties over the country, and it's hard to fly and it's expensive, right? To go look at deals that you're not going to be very close and competitive. What I would say to that is submit an offer. If you're going to be in best and final, get down there as quickly as possible. Do all your tours and comps. But, listen, if you don't tour by the best and final round, your offer is probably going to be thrown in the trash.
Okay. Another question: if I submit an LOI but miss information, so typically in the OM there's kind of what you need to include in your offer, and if I don't include specific things like what my hard money is or what my closing time is that offer again thrown in the trash? I just want to understand.
No, not at all. I think again, this is why you want to have a relationship with the broker, because if you guys send me an offer, I'm going to look at it, and if I say, hey, listen, you're missing something, I'll just call you back and say, guys, change it, resubmit it. But again, that's why if a broker doesn't know you, you've got no relationship, and you're competing with a bunch of groups that do, and they have similar price and terms. I can't speak for the broker, but I don't know that you're going to get the same level of transparency and guidance. So I think it goes back to the relationship.
Absolutely. Last question for you. Of the 88 deals that you guys closed, or the 80 deals for 2018, I'm drawing a blank on what my question was now. Even I was on such a roll. Of the deals that you guys closed, you'll have to come back to me, Brandon. I'm just drawing a blank here. You're on mute.
There we go. We did have one question from the audience, and that's, and I don't know if you can share what kind of software you use for analytics. They're asking if you use Argus. No,
we don't use Argus. I think Argus is used more in retail because of the lease terms and the increases in the lease terms. So with multifamily, it's typically 1-year leases. So a simple, I think honestly, multifamily model is much more simple. And we use a 5 to 7 year cash flow model. You can have different models that can insert different debt, right? So you can have bridge debt or agency debt, but no, it's typically a lot more simple than Argus.
Okay, excellent. Danny, I don't know if you remembered your question or not. That's okay. Well, Ty, we've gone through all the questions in our Q&A box, and man, we really appreciate you joining us today. taking time out of your busy schedule. I know you were driving and it's last minute, and I sent you the questions over earlier today, and you were gracious enough to join us and give us some insight. And I think it's been really valuable, and hopefully what it'll do is save us all some time in understanding where everybody's coming from, both buyers and sellers and brokers, and understand that we all need to work together. And I appreciate what you've contributed to that. Yeah,
listen, really, love the relationship we've built, and look forward to doing a bunch of deals with you guys. And to everybody else, my email is on there, I think on the chat somewhere. So if I can help, feel free to reach out. Again, we're brokers, but we're first and foremost here to provide service and information. So let me know how I can help. And Danny, Brandon, thanks for having me, and I'm sure we'll be in touch soon.
Thanks, Ty. Have a great one.
See you guys.
All right, Danny. Again, thanks, Ty, for that. We're going to move. That took up a lot more time than I thought it would. But that's great. That was great content. I've been to a lot of conferences and never really heard from brokers, so I think that was important. I hope everybody found that to be valuable. Be sure to go to the forum and post your conversation there. But now I want to transition a little bit. So we've worked with the broker, we've got the deal, or we're putting together the deal. And so when we're putting together a deal and we do value add, right? This is something we're going to either add value to. We're going to make something better to add value. So how do you do that? So we're going to come up with a CapEx budget. When we're underwriting, you need to come up with some idea of how much you're going to spend in CapEx while you're underwriting the deal to submit your bid to the broker. And so we want to go over some of the ways that we do that. We talked about, Danny, about touring the property, how important that is. And can you come up with a CapEx budget without touring the property? Danny?
No.
Right. Now, is there a suggested CapEx budget in most pro formas?
Yes.
Right. And so we want to remember that, you have to do your own underwriting because you have a different criteria. It's not to say that the broker's underwriting is not correct. It's that you're underwriting it for an investor purpose, right? It's a little bit different. So you need to underwrite it based on your criteria for your investors and not base it. I mean, you can use some information, but you need to check information. You need to double check comps and check that out. So the only way that you're going to come up with a CapEx budget, and that is a budget to renovate, whether you're completely turning it or just changing out the floors, you need to go look and see what it's going to take, right? And so that's why touring is very important. That's why they don't take you seriously if you haven't toured the property, because how can they have an accurate idea of what needs to be done if they haven't even been there? And you can't even tell what the neighborhood's like or what the surrounding community's like. So what are some other ways, Danny, that we come up with an accurate CapEx budget? And I know this is something we talk about. Dan, yourself, and myself, we talk about this on every deal. To get our number correct in our assumptions before we submit in the deal. So what are some things that we look at?
Well, you need to look at kind of the high level plan for the asset itself, and it's all dependent on location and area as well. So for example, one of our properties in South Carolina, the market there is really looking for stainless steel appliances and granite countertops. And so that factors into our CapEx budget compared to a property that we have in Knoxville, which, the tenant mix there does not expect granite countertops or stainless steel appliances. They are, good with nice laminate counters and, black appliance packages. And so the pricing varies. And so kind of what we do initially is, what's our high level idea for the property? Are we going, luxury all the way premium, or are we doing a hybrid, or are we going to do kind of like, builder grade material and finishes and fixtures to that unit, as well as, what's the scope of the CapEx budget? It's not only on what's on the inside that counts, but also what's on the outside. So are we just going to do some power washing and some painting, or are we going to go in and kind of reclad all of the siding and go from vinyl siding to brick? And, you really need to judge what can you do in your market and what is the vision for that property, and kind of strike the balance there. And once we set our vision, so if we're going to reposition a C class to a B plus, A minus property, that's really going to drive what we need for CapEx. And so when, for example, we're looking at lighting options or hardware for the interior of the unit, we're probably not going to go to our builder grade selection. We're going to go above builder grade because we want things to be nice and really drive and achieve that premium that we're looking for. So the high level vision is kind of going to set the context for what details within your budget. And then you better believe it, we're putting in everything in a spreadsheet to track each line item of, where we're at and how does it compare to our original estimate.
Exactly. And, on the bigger projects, it's very detailed, but determining what level of renovation you're going to do is starts with your comp research, because you have to understand what your competition has in order to determine because, hey, I like granite, but how do I know that my clients, i.e. my tenants, expect granite for that price? Because if they don't expect it for that price and I spend the money on it, I did not get a good return on investment. Okay. Because they may not be willing to pay for it. I need to know my market. That's what Dane was talking about, knowing what your market is. So we'll do a comp analysis. We'll go to properties that are where we want to be when the property is repositioned, and look at what they're providing. Do they have laminate? Do they have granite? And sometimes we'll even say, okay, yes, I understand that this range has laminate, but we want to set ourselves one step ahead as in the amenities, and we want to be just one step behind them in the rents, and we can justify that cost just to kind of set ourselves apart. So those are decisions that we're making. But above that too, you got to look at the property and what condition it's in. So are you going to have to replace the roofs, when you come in there? Because we can talk about cosmetic and making it nice, but then we have to talk about functionality, windows, doors, roof, shingles. Are those things going to be things that we need to replace? So when I go to tour the property, we've talked before about doing drone footage. We actually had the drone, Danny, in the office, flying it around right behind my screen right here. And I didn't crash it into anything. We were going to try to fly it for the video, but we thought it best not to be. But I want to get that out right now and just kind of show everybody kind of what I'm using to I do an overview fly of checking out the roofs and everything like that. So give me 1 sec. Let me grab that.
Yeah, Brandon, while you're getting that pulled out, guys, this is some pretty amazing stuff that Brandon has. It's way beyond anything that I could do. So again, I just need to highlight the importance of having the right team member, whether they're part of your partnership or whether they're a paid professional, but having someone that can do this work and fly over or go up and manually crawl each roof and inspect before you buy is absolutely critical to understanding what is deficient in the property, what systems, the roof, the plumbing, the hardware, the wiring, what is deficient that you need to fix or upgrade. And this is one component that we use that it's tremendously valuable for our team. And again, like I said, nothing that I could do myself. It's all Brandon. So
you could do it.
Find the right fit.
I have confidence in you. We'll have a little drone instruction video. So this is my drone right here. It's folded up. Okay, I'll let you see that right there. This is a DJI Mavic Pro. I bought this one because it's very compact, and I'm going to show you how it folds out and why I like it, because I can just carry this in a briefcase. Okay, you can kind of see it right there. This will go up to 300 feet. It caps out of that for the FAA license. This is 100% GPS. I can set it on pre-courses. It is geofenced, so I can't fly into restricted airspace unless I have the FAA Part 107 license. But this is a very important tool. This is not your drone that you buy from Target or from Walmart. This is a nice drone, but this runs about $1,100. This is a critical part, both for CapEx and for presentation for our investors. So we use this. I'm going to pull out the remote. This is the remote control here. It folds down like this. My phone goes in here, and then that's my screen. I can take video footage. I can snap photos with this all right here. I have all my controls, and on the back I have also controls here and here that I can move the camera around and get. It shoots 4K video, so excellent video quality there. But this is where it's really going to blow your mind what this machine can do. And DJI is one of the only ones that can do this. So I'm going to try to screen share here. Let me pull this up. I want to show you guys something. This is my estimating software. Yeah. All right. Can everybody see that? Okay, because I can't see myself on this.
Yeah, I can see it, Brandon.
Okay. Yeah, I kind of changed my whole thing. So this is Xactimate. This is my estimating platform. This is one of the, this is actually one of my drawings that I did for an apartment complex that we have. I'm going to show you kind of some of the things that this can do. I drew all these rooms out. I can grab a room. I can click on it here, drop it in, and adjust it. Let me get rid of that though. And I can go into 3D level. I'm going to show you this right here. And I can zoom into the rooms. You can see all my cabinets and everything are in there. I built all this out. And here's all like line items that I have for that. I can do all the levels. Let me zoom back out here. Kind of show you. Okay, so this is my exterior. These are my patio doors, my bedrooms, and I can go right into this building. If I can get it right here. And you can see right through into the cabinet. So this is a very important software that I use. Let me show you a different level of this. Here's a single floor plan. I've got 1 bedroom, 2 bedroom, and I can click on these rooms. You see how they highlight right there? I can click on those rooms and I can type in, let's say I want to do sheet vinyl. Okay, I can come in here, standard grade, economy grade, high grade, premium grade, and you can see the difference in the pricing. Okay, I can let's grab an average grade, and I can just click on this room right here, and it's going to add it right there. See, there's removal and replacement. So that's remove and replace. You can go back in and change it. You see these little ands, that's remove and replace. I can do it. So let's say I don't have any costs to remove. It's already been taken out. I can change it to just replacement. All these ceiling fans that you see here, those are all estimated items, like my sink faucet and everything there, dishwasher, all that is estimated right on the sketch. So it's calculated by the actual square footage of the room. When I put like baseboard, it's going to calculate the baseboard based on the actual linear foot of the baseline perimeter of the room. And this is all based on the zip code of the market that I'm writing in. So if I go back to this is actually intended for an insurance purpose, but it works great for this. This is called Xactimate, spelled with an X. So I can put in all the information here, put in all the zip code and everything, and it'll pull down the address, and what I can do is I go on my main page and I can right click and I can request roof measurements, and it will pull down a satellite telemetry sketch and import it into this software without me pulling a tape measure out. And then I'll run a macro on that. Let me just show you kind of what that is. Most people don't understand that. Let me go to my roof. All right. And actually go to my estimate. So let's say I imported a roof. I can go to macro. I can go, these are macros that I've built. Architectural 30 years, 7 to 9 pitch, single story, 30-year architectural. I can click on that, run, and it'll drop in all of the items I need to replace the roof, all the drip edge, all the flashing, everything with one click. I did that. And it gives me the actual market price for that without breaking out a tape measure. So I'm gonna stop sharing that. That gives you a little idea on the detail that we can go into on that. So it's not a guesstimate, but at the same time, it is. I know I'm talking a lot on this subject, Danny, but it's where I thrive. Some of the notes I wanted to bring up on this is the differences between single family estimating and apartment estimating. And the biggest thing is the scale, right? You don't have one house, you have 150 houses. So, when you're talking to your cabinet guy and they say, well, how much is it to just do laminate? Because, this granite's just coming in a little bit higher. And they say, well, it's only, $600 difference per unit. When you're doing your house, you're like, oh yeah, it's only $600, man, I get granite. No brainer, right? Now times 130 units, that's $78,000. Big deal. Okay. So it makes a big difference. It can be a very negative thing when you're off by $100 on units on one little item. Because if you're $100 off on baseboard and $50 off on carpet, it can blow your budget really, really quick. Okay. So you need to be really careful on that. But it can also be a positive, because the same idea, the economies of scale, because I can go to my contractor and say, now look, if you were just doing my house and installing granite at my house, you're going to be in and out in one day, and you're going to be looking for more work the next day from somebody else. But I can guarantee you work for 6 months. You just come out here day after day after day, and you work here. Now, for that, I want to get a better price. So how can we work together? I'll help you. You'll have sustained work. You don't have to do advertising. And in the meantime, you can be backing up work past our project. So when you get done with my project, you have plenty of work. So it can work both ways. It can be a negative and it can be a positive, but it's all based on the economies of scale. Anything you'd like to add, Danny?
I think it's amazing. Again, the Xactimate software, I was just trying to read through the questions. There was one there, Xactimate, spelled with an X. It is critical to get the budget right. As Brandon said, a $500 swing above per unit can be detrimental. At the same time, if you can, again, spend your time to work hard and negotiate for discounts or better pricing, saving 500 times 100, saving $500 per unit times 100 units is a significant savings for your project, or, you could spend that money elsewhere in your renovation. So it's critical to get it right. Brandon, I know it's about 4:40. I think we've got about 5 minutes left in the session. I wanted to jump in. There was one more question here for you from Jameson. Have you noticed a increase in construction materials due to the tariffs on imported goods, or in general, kind of the cost of construction rising due to cost of goods sold?
Well, really the cost of construction has been up, especially this past year, just due to the pure volume of construction, supply and demand. Your labor's gone up because they don't need to charge less because they have plenty of work. So that's driven labor costs up. The tariff thing has not affected us as much unless you're dealing with more electrical for copper, so your metal products. things that are more imported on that. So if you're doing metal roofs or anything to do with imported metals, that has affected it some, but those are quoted on a daily basis. It used to be you'd walk into a supply house and they would give you a quote. This is what we run. You walk in there now and said, well, today it's this, but if you order next week, call us again and get another price for it. So it's fluctuating. It's not trending any one direction. It's kind of just up and down because it is a trade war. So it's a little bit back and forth. And so some things will rise and some things will drop because we're reducing tariffs on the same front. One thing I did want to mention on that is I kind of caveated into or kind of segued into the Xactimate by talking about the drone and the satellite telemetry. If you don't have, let's say there's tree cover over that building and you can't get to it, that drone has a tie-in to that system. And it'll automatically fly the drone by itself around the building, taking a bunch of photos all the way around the building at set points. And it'll build the roof sketch on those photos and import it into the estimating system. So that drone actually will work together with Xactimate, which is pretty phenomenal. That's a new software that just came out in 2018 that hardly anybody knows about. I'm a bit of, I'm a gearhead. So if there's a tool or something that I will make my job better, I have it. Especially, so I'll leave it there because I could talk for days about tools and gear. That software runs about, if you buy the whole year, just the desktop version, it's going to run you about $1,600 for the year. If you want the mobile app and the web version for the whole year, if you buy it at once, it's about $3,000. If you pay monthly, it's about double that for all three platforms. I find that you only need the desktop platform because you're not really estimating in your car, right? So you're sitting at home doing it. So don't waste your money. It's very valuable. They do have training sessions. They have certifications. Those are a bit of a waste of time. Get in there and click around. You're not going to break it, but it's invaluable to me.
We had one more question come in from Devin, asking about a price per unit that we account for CapEx in our monthly expenses. Is there a rule of thumb? And I'll take the answer from the underwriting perspective, and then Brandon jump in from the CapEx side. We're talking about two different numbers here, I think, for you, Devin. The reserve amount is what you would account for unseen or unplanned repairs that would occur in your property. And typically we account $250 per unit on an annual basis. And so whatever that monthly works out to be, that's what we withhold each month for property reserves. The second piece to it is CapEx. And when we're talking about doing a value add project, we're talking about one-time activities that we will do in our ownership to add value. For example, you're not going to put a new roof on every 5 years. You're going to put a new roof on and 30 years later you'll need to replace it. And so just differentiate between CapEx and reserves. There was a webinar that we did, an underwriting series, part 1. We go into great detail about rules of thumb for your underwriting and prices per unit. So check that one out. And then Brandon, anything else to add on like a CapEx monthly expense or anything to that?
No, because CapEx is not really a monthly expenditure. So CapEx is a one-time. We spend it, and then it is what it is. The monthly would be, like you said, a reserve just in case, an unknown figure. Because on a monthly basis, you're going to want to raise your CapEx at the beginning. That may be kind of what the question is leaning towards is, are you reserving money to build your CapEx budget? I don't recommend that because I think you're going to be cash light through the whole project and never have enough money to actually do your renovations. When you purchase the property, whether you do it through bridge debt or whether you do it through capital raise, the CapEx amount you need to have access to that at the beginning of the project so you can just do it. Because otherwise you're going to be there for years trying to get that reserve.
Yeah. One more question came in from Scott Stamps. Good to see you on here, Scott. Sorry we missed you at breakfast this morning, but we'll catch you at another one coming up. Does your team fund all due diligence costs, travel, inspections, appraisal, etc.? When you're looking at buying a 150 unit apartment community or greater, there are going to be travel costs that you incur to go and tour the property. And that is something as a deal syndicator or general partner sponsor, you just kind of make that investment to go out and look at those properties and do those things. Once you have the deal under contract and you're going to close on it, the inspections and the appraisals are typically paid through closing. And the way the larger multifamily properties work is when you secure your lender, you will send usually a deposit somewhere around $10,000 to $100,000 just to the lender. And the lender is going to use that money to pay for some of the inspections or appraisals or phase one environmental studies. And then you'll see those line items show up at closing as a line item in the closing expenses. And so the property will pay for and cover those specific closing activity expenses.
Right. And, I mean, as far as like travel expense, it's like anything. This is what we're doing. You have to drive to work. You have to do those things. I'm going to look at a bunch of deals before we, do you win 50% of the deals you look at? No, it's much less than that. So we're looking at deals all the time. It's just part of it, enjoy it, make it, gas is gas, we're going to drive no matter what you're doing. You're going to be spending money driving. So we don't really nickel and dime it to that point. I love traveling to tour properties. That's kind of my thing. So I've got at least one more set up for beginning of next week that I just set up today. So I'm gonna be looking at that one. So I think that's all the questions, Danny, and that is all the time. So I hope everybody enjoyed that session. Danny, thanks for joining us. I know.
Thank you. It was great.
I thought you were going to have to jump off early, but it looks like you got on late and were able to stay the whole time. Awesome. Well, that works great.
Flexibility.
There you go. And you moved locations. You're not in your kitchen. You're in the dining room now.
I am.
Yeah.
Yep.
It's a different perspective. I was like, wait a minute. Different
Where
chair.
is he? Yep.
All right. Well, thanks again, everyone. And we'll see you soon at the next session.